I'm Lee Stone, and this is your UFXBank Week in Review. Today, we will be covering some of the major financial events of the past week and how they impact the global currency markets. But before we cover the headlines of the week, let's go over the last week's risers and fallers. The euro had a positive week against the dollar, moving up 1.1% and last trading at 139.28. The British pound traded mostly mixed versus the dollar, finishing the week up 0.8% and last trading at 159.56. The US dollar and Japanese yen traded down most of the week. Dollar dropped 1.5% to close Friday trading at 82.07. The US Canadian dollar pair declined for its sixth consecutive week, dropping another 0.9% and last trading at 101.11. Oil lost some of its momentum this week, trading mostly mixed. Crude oil gained 1.3% and closed at $82.66 a barrel. Gold continued its historic rise, jumping another 2.15% to close the week at $1,344 per ounce. In news, this last week marked the yen's return to levels matching and even surpassing its pre-intervention highs. Contrary to earlier statements, the Japanese government has indicated that they are not planning to intervene again. Non-farm payrolls were released on Friday, and since this is usually a hot-button issue, I'd like to get right into it. I have here in the studio with me analyst Martin Smith. Martin, how are you?
Very well, thank you, Lee.
So, Martin, the non-farm payrolls report came out on Friday, worse than expected. What can we make of this?
Well, the report was expected to come out with an even balance, or even slightly positive, in fact, at maybe 3,000 jobs. Instead, the US unexpectedly shed 95,000 jobs over the month of September. These were, however, mostly government jobs, and many of them were temporary hires relating to the census. It's worth noting, in fact, that private payrolls actually increased by 64,000 jobs, while the total amount of government jobs lost was something in the region of 159,000, 77,000 being consensus jobs. Unemployment remained steady at 9.6%, which is good considering the analysts had expected a slight increase to 9.7%. In fact, all in all, despite the dramatic figures, the report wasn't as bad as it might seem. It's true that it was below expectations, being that private payrolls for August saw a gain of 93,000 jobs. But still, the increase in employment for the private sector is a positive sign that things are going forward.
And so what does this mean for the dollar?
Well, I don't see the outlook for the short term being very good. The dollar has seen its longest stretch of losses in 2 years. The jobs report has left a lot of speculation that the Fed will be buying up more debt, which will further cut down the dollar's value. If the private sector continues to add jobs, confidence in the economy will build again. But I think the dollar will have a turbulent ride into 2011.
We had several discussions about 3 or 4 weeks ago regarding the yen. Now, what happened to the yen after the government of Japan's actions?
Well, it looks like the skeptics may have been correct on this one. As we discussed, the consensus among many analysts was that the Japanese government's foray into the Forex market would likely prove futile. As we have it, it seems they were correct. Since the Japanese government's well-noted intervention, with estimated figures being around $25 billion, the yen has been making steady gains on the dollar. As we can see, it didn't hold its position for very long, and as you mentioned earlier, it has reached a level higher than it was prior to the intervention. Would it have reached this level without intervention? Probably. Did the intervention help? Well, that depends on how you look at it. From a purely economic standpoint, as in the resulting rate of exchange, I think we can say it's a resounding no. The yen has returned and exceeded its previous level. From a more socio-political perspective, I think the jury is still out. The government had to take some sort of dramatic action in order to quiet the storm that was brewing. Did it silence the calls for intervention within the Japanese business sector? Perhaps, at least for now. But the concerns are still there, and if the yen continues to rise against the dollar and other currencies, the situation could heat up again. What action the Japanese government would take in that scenario, of course, is open to debate.
Okay, well, let's go now to our Ask the Broker question of the day. Johann Strauss of Hamburg, Germany writes, I've been hearing that we are in the middle of a currency war. Is this true? And if so, what does it mean?
Well, there has been a lot of talk about a currency war, hasn't there? Most analysts are saying, of course, that we're still very far away from a currency war. But there is a fear that many governments are starting to slip into a protectionist mindset with regard to their economies. China has come under a lot of criticism and is being accused of keeping the yuan undervalued to boost exports. Low interest rates in the US and other industrial nations are blamed for propelling capital flows into emerging markets. Japan's recent actions are another example of governments trying to manipulate the market. These type of actions are contributing to an atmosphere of heightened tension in the global markets. At the recent IMF meeting, there were many warnings against letting the situation escalate. I would tend to agree with other analysts that we're not quite in a currency war, so to speak, but there are definitely some hostile actions occurring.
Thank you very much, Martin. We hope you enjoyed our weekly review, and we hope you'll join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit your own questions to our weekly broadcast, please email your questions to Martin Smith at askthebroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.